Yeah, good day, and thank you for joining the class this day. As I go to take you through this teaching, it is called Introduction to Shares and Smart Investment. I want to sincerely welcome you to the channel. Stay calm, take your pen, and learn as I take you through everything you need to know about smart investment. I guess you're ready for me. So if you're ready for me, let's dive into it. Like I said, I am Joseph Oluboye, and I will be taking you through shares and smart investment today. So come along with me as I start. This training is designed for specific people and it's not meant for everyone. And for example, everyone that wants to enlarge his or her source of income, this teaching is designed for you. Everyone that wants to grow her wealth, this teaching is designed for you. Student aims to build wealth for the future, and this teaching for you. Parents who wants to leave inheritance for their children, I recommend this teaching for you. Those who wants to keep earning money even when they are sleeping, I tell you this teaching is something you must not miss. So gather yourself, your pen, of course, and get ready for the class. Let's dive into it. What is shares? We heard about shares, people talk about it, but we don't really know what it is. And of course, it looks very strange to some people. They think it's something that is far from them. But this is the way to bring it closer to you, that shares is not far from me. Most of the things we spend money on daily, they are on shares that you can buy, of course, and be earning from them. And as it is today, there are products you will buy in market that you are making money for me. And for example, talking about, okay, let me not take us there. Let's see what shares really mean. What is shares? What are shares? Number one, a share represents a unit of ownership in a company. A unit of ownership in a company. A unit of ownership in a company. That is share means, meaning that you, for example, Dangote Sugar Company, when they sells their shares and you buy a portion of it, it means that you become a co-owner with Dangote Sugar Company. And that is what it means. So when you buy a share, you own a small part or a fraction of that company that you are buying their share. And then, example, if a company has 1,000 shares and you buy 10 shares out of that 1,000, it means that you own 1% of that company. And of course, there is no how they shares the money, there is no how the company enlarges. Your money that you use to purchase that shares keeps increasing as well. And this is what it means to have a share or to own a share. Peradventure, you're watching now, please just comment under the at the comment section. What do you think a shares is in your own language? Okay, let's talk about what is shares market. What is shares market? In a layman language, share market is a place where shares have been sold, and that is it. The share market, also called stock market, another name is being called a stock market. It's a platform where people buy and sell shares of a public listed companies. For example, Dangote Sugar, for example, Wema Bank, for example, MTN, Your Glow, and all the companies around you. We have Coin Oil and many more. They have a platform where their shares are being sold. That is what is called share market, and it is called stock market. There are two types of share market. If you would like to know, number one is primary market, where companies issue shares to the public for the first time. That is, it is called IPO, initial public offering. There's a platform, for example, I want to start a cement company and I don't have enough money. So I will go to this platform and list the name of my company. And when people begin to buy it, the money people are using to buy it, I will add it to the initial capital that I have. Then I will go and start the project. The moment I start the project, as it's appreciating, the money people who bought it, the money they used to buy the company product also begin to appreciate. And this is what we call shares market. Sorry, this is what we call primary market. So I hope that is clear. And secondary market, where existing shares are traded between investors. For example, I bought a share of a company, and because it has appreciated, the money has become big, I feel like, okay, let me sell it so that I can make some money to myself. And I decided to sell it. I can go to this share market and list it and sell as many I wanted to sell at the stock that I've purchased. E.g., on stock exchange, we have example of stock exchange. We're talking about Nigeria Stock Exchange. We'll talk about that is NGX, and we'll talk about New York Stock Exchange, that is NYSE. We'll talk about London Stock Exchange, that is LSE, and many more exchange platform that you can, of course, sell your stock. I hope you're coming with me. Okay, how do you earn in stock? People talk about stocks. So how do I earn in stock? Is that a big challenge? No. Earning in stock is very, very simple. You heard what I said. It's very, very simple. Please go to the comment section, identify your name, tell me your name and where you're watching from all over the world. Please go to the comment section, identify your name and where you're watching from all over the world. Please, and don't forget to tap on the subscribers button, subscribe to this channel so that I drop update as regard this topic, you can learn a lot from it. Okay, there are two major ways to earn from share. Let's dive into it. Number one, it is called capital appreciation. It is called what? Capital appreciation. That is price increase. Another layman language is price increase. And if you buy a share at 10 naira and later sell it at the rate of 20 naira, you've made profit of 10 naira. This is make, how to earn from share. So you buy when it's low and you sell when it has increased. Of course, you make profit. Like you can see in the coin tagged here, you see the small coin growing up. As it's growing, the value keeps increasing. As it's growing, the value keeps increasing. This profit is called capital gain. This profit is called capital gain. For example, Wema Bank stock was being sold for 9 naira in January this year. As of today, I'm telling you, Wema Bank stock has increased to 23 per unit. 23 naira per unit. You know how much? That is 100 plus increment. 120% increment. So if peradventure you bought Wema Bank share January this year, your money has appreciated enough. So you leave it. The price is still going up. So there are shares you can buy. They are not far from you. So this is how people earn from uh, share market. And let's dive into number two, dividends. That's what we call dividends. Some company shares part of it with shareholders. This payment is called dividends. This payment is called dividend. For example, the profit they made every end of the season, it may be monthly. They decided to give it back to their sponsor, to their shareholders. So they call you together, or if they can't reach you, they email you that, oh, from the shares you buy, we have so profit, and they send it to your account. If you hold 100 shares and the company pays 2 naira per shares as a dividend, that means you have earned additional 200 naira to your existing money in their company. And this is the two major ways people earn from shares. So some investors earn from both price increase and dividend. So whether dividends come, your price will increase, or dividends comes and price increase. So you earn the two way. So it is very important. So as you watch me, I want to tell you this is a new generational business to start for your life. This is an investment you must start. Are you hearing what I'm saying? So let's me take you a little bit further. Benefit of owning a share. You want to know why should I own a share? Yeah, of course. I have my money in the bank. Of course, do you know that when you keep your money in the banks, it reduces. So, but if you invest in shares, your money appreciates. Instead of you leaving your money redundant, doing nothing in the bank, I encourage you put it in share market. and see how it's going to grow. Okay, number one benefit is growth. You witness wealth growth. You witness, imagine someone who bought a Wema Bank shares of 100,000 at the beginning of this year. Now, as I'm talking to you, that 100,000 will have become 240,000. 240,000, not 260,000. That is what it means. You don't labor, you don't work, but your money keep working for you. So your wealth keep growing, and this is what we call share growth. I mean, this is what we call wealth growing. Your wealth keep growing, and that is it. Your wealth keep growing. So I encourage everyone. Number two is through dividends. Dividends is the profit that was made from the company. Company decided after they have paid off their salary, after they have paid all the workers, after they have paid all the expenses, they decided, okay, the remaining money, we add it to our capital, and of course, we share it based on the percentage to the shareholders. And you see, for example, in the slide you are seeing now, these people are glad because they received the certificate of their dividends. And that is how you grow, you earn from dividend. That is a major reason you must start from now. While you are sleeping, your money keep working for you. Your money keep working for you. So please, I want to encourage you. There's a new thing in the system, in the world now you must invest in. It's been existing for a long, but we think it is far. It's not far, it is close by, and you can make a lot from it. Number three, ownership. This share stock market makes you to become a owner, a co-owner of a company. For example, there is no amount of sugar you buy. If you are buying Dangote sugar, you are making money from it. If you are buying Honeywell flour, you are making money from me. If you are buying MTN card, recharge card, you are making money from me. And that is how it is. So you become owners of a particular company. This is what shares does for you. I heard Reverend Adejumo speaking the other time about shares, and I begin to investigate it. And that is what I have found. Today, I have my shares working for me and appreciating. So I want to encourage you, if you want, if this is a more reason you must own a share, you must start now. Don't delay. Start now. And I'm here to guide you as your coach, as a mentor in this journey. I will do it with all gladness of heart. So if you are watching, please go to the subscribe button and tell me I'm interested, and I will guide you at the comment section rather, and tell me you are interested. Okay, type it there. I want to see it. Number four, you beat inflation. Inflation is increment in the market, the instability of the market. When the market begin to appreciate, of course, because you want the money that is appreciating, you already increase in your in capital. You already increase your worth had already increased. Of course, your money also increased. So you are placed on a platform to beat inflation when inflation comes, when market begin to go up unnecessarily. That is what we are witnessing in Nigeria. So people have gone ahead and have purchased shares before now. And as the market is going up, their money goes up. So they don't feel it. But those people who do not see it, they feel the pain. I hear people complain every day, but there is more to this. If you start now, it is not too late. It is not too late. So you can start now. You beat inflation when inflation comes. And as it is, the market will keep going. The flexibility is another thing. You are in charge, you can withdraw it, you can buy it, you can resell and make your profits, and then of course. So please, I really want to encourage you to dive into shares market. And then this is the next step: mistakes to avoid as a beginner investor. Mistakes. There are so many errors people make in buying share. There are 8 mistakes you must avoid as a beginner investor. 8 mistakes you must avoid as a beginner investor. So I will quickly run it down. So you come along with me. Investing without a plan. So many people invest without a plan. Jumping without knowing your goal. Risk tolerance or time horizon can lead to panic selling up or impulsive buying, because you heard the news that a particular product is rising, is rising, is rising. no plan. You just carry your money and go and buy it. But I've gotten to a limit, and the moment you bought it, the product begin to come down, and your money begin to depreciate. Those are the error I've made before, and I won't allow anyone to make it. And that is why it's good to follow someone who knows the road. Your money will begin to decline, and there is nothing you can do about it. So decide upfront if you are investing for short-term gain or retirement or something else. So if you want to invest for short-term, determine that this market, I want to invest this for 6 months. I want to buy this share for 6 months, and I will sell it off. Whatever profit is comes, you make it. Determine, and if you are buying it for a lifelong stock, you determine that, in the next so year, during my retirement, I'm going to be harvesting this investment. So determine now, don't just jump without a plan. The money you need for that thing, don't invest it without a plan. I beg you. Okay. Number 2, chasing old stock. Like I just said, hearing about a trendy stock and buying it at its peak often leads to losses. Because today you heard that, okay, let me just take this for example. Last month, when my stock rises up to 130% appreciation, and then people rushed into it. They went to buy it. Some people went to buy it at that point. As I'm telling you yesterday, when I check it, it has begun to come down. A lot of people who had invested into it, their money began to depreciate, of course. And that is what it means. No, it's going to rise again, but it may take time. So that is, you don't hear about a hot stock, a hot share, and just put your money in it. No, you look at pros, you look at things. There are things you look into. I'm going to mentor you. And that is why you need to follow someone who knows the road. So what I will tell you, research companies thoroughly. Instead of following hype or social media, do your personal research. Do your personal, when you heard about a company that is appreciating, please do your personal research. It's going to help you. Do your personal research, and that will really help you. Let's talk about number 3 rather, ignoring diversification. Diversification means you're putting all your money in one or stock exposes you to a huge risk. That is what I mean. You put all of your money in one market. It exposes you to risk. It exposes your money because the moment that product comes down, your money comes down with it. So as a beginner, I want to encourage you to spread investment across sectors, asset types to reduce potential losses, asset types, different kind of asset. So this will reduce your losses because, okay, for example, I have 100,000 now, and I put all of the 100,000 in one market, and the market begin to go down. No, but I said, okay, let me put 10,000 in one stock, and from there, you begin to witness growth. Some may come down, but the other will be up there, and your money is safe. And that is what it means. Don't ever ignore diversification. Don't ever ignore it. And number 4, not doing fundamental research. Buying without checking the company's earning, debt, competition, and management quality is gambling, not investing. So before you invest into any product, do your fundamental research. Is this company in debt? Is this company currently servicing any debt? You must know that. Does this company have competition? There are other companies, for example, we have communication company Airtel, we have MTN, we have Glow is there. They are competing. And without you place their competition in place, you just dive into it. Of course, I know when they were selling Airtel stuff at the rate of is it 50 naira thereabout, or is it's not even up to 50 naira. Today, Airtel shares goes for 2,000 plus. 2,000 plus. It has appreciated. If you bought it 5 naira then, it has appreciated to 2,000 plus. That is what it means. Investigate the companies before you dive into it. And management Look at their management. Did they have a quality management? If you don't do this, it's like you are gambling. You're just putting your money into it. No, it is gambling, not investment. So learn basic financial metrics like PE ratio, and then earning growth and debt to equity. Look at did they are they servicing debt? Are they earning? Are they really growing? Please consider all of these before you dive into any market, any trade, any share. Number five, trying to time the market. You can't time the market. Constantly buying and selling based on prediction rare beats long-term investment. It's not a good thing. You're just trying this market. I heard about this. You sell off your base and buy another one. Of course, it's not good. It's not a good thing. It's not a good thing to do. Focus on time in market, not timing the market. Focus on time. Like, okay, so this the moment is appreciate. That is you focus on the time, not putting time here and say next month. It will not appreciate next month. So focus on time in the market. Check the moment the market is going. Pew,